All right. Good morning or good afternoon, everyone. I'm Lane Houck. I'm your host or co-host, and I have Lynn here, my co-host here with the Marketing Center of Excellence. Every month we do a masterclass for agency owners. This masterclass focuses on different topics and opportunities, ideas that we face as agency owners. And our goal here every month with the MCOE Masterclass is to equip each of you with great resources, tips, strategies, and things you can do to grow your own business, and also to help you consult and provide advice to help you grow your client's business as well, because we know that's the kind of the business that we're all in. Today, we have a really awesome and I think very timely topic in and around the ideas of business, personal credit, and business funding. As credit markets are starting to dry up, the economy is definitely in a state of transition and shift where if we're not already in a recession, we're going into one. And so having access to credit is going to be a really unique opportunity for businesses. And I think probably something that may help some businesses stay alive and stay operational when times get tough, especially depending on the type of business that you're in, where cash flow can really be a critical component of your success. And not only for you as agency owners to have access to this knowledge and these resources, but also equipping you to have this knowledge and resources for your clients will also I think really help you. Oftentimes, the biggest thing holding a business back is their ability to invest in marketing and a marketing strategy to help them get that ROI and grow. And so if you can help that, provide them resources and opportunities to get access to cash flow, credit as a business, they can fund their marketing campaigns and then in turn get that ROI and jumpstart their business. So without further ado, I want to introduce our experts today. I have Don Oberle from CreditIQ and Amanda Webster from Fund and Grow. Both are really knowledgeable in their respective fields, and I'm really excited to have them both here. I'm actually not going to talk a whole lot today. I'm going to just turn the mic over to Don and Amanda. We're going to let them talk about personal credit, business credit, and then business funding. And why personal credit? Amanda will be able to really tie the personal credit and the business credit together for you. But Don is an expert in credit repair, credit restoration, and I'm going to let him go first. Amanda will follow, and then we'll do a Q&A at the end. So about 20, 20, and 20 for our hour session here today. And if you have questions, please put them in the chat. Lynn and I will moderate and handle that Q&A section once Don and Amanda are done. So, Don, I want to welcome you. I want to introduce you to our members. And there will be plenty who watch the replay as well. I'm really grateful to have you here today with us. Give us a little insight about who you are, CreditIQ, and then I'll let you just jump right into it and share your screen if you'd like.
Thanks for having me, Lane. I'm going to put you on the spot. I should have prepped you for this, but I know you can handle it. Could you just share a testimony real quick on what happened? I did the coaching, taught you some techniques, and then I actually surprised you at the end once your scores, and I taught you how to get that Dodge, I think, Charger or something for your son and how to negotiate. You save tens of thousands of dollars, right? Not in addition to... Can you share a quick testimony?
Sure, absolutely. I'd be happy to. For those of you watching or listening, in the last crash in 2008, my wife and I lost just about everything in real estate. We were heavy invested in real estate, and we were both in the mortgage and real estate markets, and we got hit hard. We lost just about everything. So we really were faced with starting over in 2010, literally from ground zero. And I went from having a near 800 credit score into the high 500s with losing everything, multiple foreclosures, lost both of our businesses. It was literally a devastating blow. While we had two young kids who were babies, it was a major blow, but we got to work, didn't give up. And Don was a really instrumental part in helping us just figure out how to work through getting that all squared away on the credit side. Because I know, having been in the business prior, credit score is definitely really important, especially if you want to have a business and you want to run a successful business. You need access to credit and all that stuff. And you can also, obviously, on the personal side, you can pay an exorbitant amount more in interest and other penalties and fees if you have bad credit versus having good or great. Don, in short, just helped us in a mentoring program for several years. I actually had met Don back in 2006 or 2005 at a mortgage banking conference. We both spoke at that conference. And that's how we met each other. And so I reached out to him many years later when we were ready to start the repair process, and he's been instrumental. I now have a near 780 score. We've worked hard at just getting back on our feet. And then Amanda and her team have been really amazing at helping Signal Genesis get access to credit as a new business, as a new software business. And I'm excited to have her share about just some of the things that they've done in helping us get access to 0% credit really quickly and easily. Anyway, also Don, my older son got ready to buy a new car recently. And I was like, man, I know Don knows a bunch of stuff. So I reached out to Don, hey, do you have any strategies or tips on how to help us get the best deal for him on a new car? And rather than buying, we went with his advice and went with a lease and got a phenomenal deal. And it was just he was really gracious in just helping me and my son just get some knowledge and advice. So anyway, both of these guys, Amanda and Don, are really knowledgeable in their fields and also very giving. And that's why I asked them to come on and just share their knowledge with all of you today. So Don, hopefully that teed it up for you.
Hey, thank you, brother. I appreciate it.
Man.
Yeah. And because of your blessing, I met Amanda, and I've been dealing with business credit people for 30 years, and her team are the best I've ever found. So you're going to learn a lot today, and I trust her as well. My name is Don Oberle. I'm the chairman and CEO of CreditIQ. And to give you a little background on myself, I was born and raised in Indiana, moved out to Tulsa, Oklahoma, Spartan Aeronautics, got into aerospace. And as a young kid, like many of us, we're like, don't know what our passion purpose is yet. And so I remember calling my family up saying, hey, I don't think I want to design rockets and airplanes. They said, just finish what you started. So I did. Got my degree, moved back home to Indiana, set up my first resume to Lincoln National Bank, which is Lincoln Life. They're one of the largest in the nation. Got my Series 6, Series 7, got involved in investing. Then I got involved in commercial real estate lending, then residential real estate lending. And then I realized, this is 35 years ago, I realized that looking at people's credit reports, I'm like, wow, people need coaching and support. So you've heard that old saying, it's not rocket science, folks. It was for me because credit repair and financial fitness coaching didn't exist 35 years ago. So I used my engineering background to experiment with the bureaus, because what happened was when I saw these people with credit issues on the credit reports, they were trying to buy home loans and business loans. I said, I wonder what my credit looked like. So I pull it up, and there was a collection for $150 for a utility bill. When I'd moved back home, I put a forwarding address in, but the utility bill didn't follow. So it ended up on my credit report. So I called up the collection agency, said, hey, I want to take care of this. They said, great, send them a check. 3 weeks later, I called them back, said, now, when are you going to remove this off my credit report? And they said, we're not going to. And I said, what do you mean? I just paid it. And they said, well, the law says, I didn't know what the FCRA meant back then. And it says it stays on for 7 more years as a paid bad debt. I'm like, that's not very fair. So I used my engineering background to experiment with the bureaus, because credit repair didn't exist back then. And within 6 months, I figured out how their systems worked. And I was able to remove that paid collection 6.5 years early. So a light bulb went off. I'm like, okay, I understand lending, I understand real estate, I understand investing. Now I understand credit. And so I did research, and I found out per capita, the Bay Area and San Francisco had the most mortgage bankers in the entire nation. And so moved out to San Francisco Bay Area, opened up the nation's first credit restoration company. And I'm going to show my screen here. So we were the nation's first company doing this. So here's our website. It starts off with, you deserve a stress-free financial life, holistic solutions to your financial well-being since 1990. So let me show you why I've been around for so long, and then we're going to jump into some education. I'm going to teach you a few tricks today that's going to dramatically help you, especially with Amanda and her team. So the forensic credit restoration is cleaning up credit. We use what's called forensics, which I'll show that to you in a moment. Some of you may or may not need that. The credit and financial fitness coaching, we started doing this 33 years ago. And then about a year into it, I measure everything. And so I noticed that 40% of the clients that we were working on to improve their scores, because we specialize in mortgage banking, real estate banking, 40% of the people, whether they're making $500,000 a year or $30,000 a year, were making mistakes. So I went to my team and said, look, we've got to build a coaching system and teach people how to fish. How do those credit scores really work? What to do and what not to do. And so we developed the 2 to 3 hour one-on-one credit financial fitness coaching system. And I remeasured it a year later with the knowledge that I'm going to share with you folks in a moment. And we dropped it from 40% of the people making mistakes down to 9.5%. So that means more closed loans, right? So we're very proud of that number. And that's really our flagship, is the credit and financial fitness coaching. And then about 25 years ago, we added bankruptcy law and tax law. So if you haven't filed your corporate or personal taxes, We can help you with that with our CPAs or attorneys. If it gets really bad someday because the economy is getting a little wonky, God forbid you have to file bankruptcy, we do those as well. The business consulting is Amanda and her team for the business financing. That's her division. Professional credit monitoring is where we update people with a mortgage lender's soft pull. So if you don't know the difference, Credit Karma and scores you get from your credit card company, and even scores you get directly from the credit bureaus themselves. This is usually a big aha moment, folks. Those are fake simulated scores. And so you're thinking, wait a second, I get this directly from the bureaus and it says FICO on it. If you read the fine print, it says, this is how we think the algorithms work. And so the easiest way to tell whether you're getting a real score or not is if you're not paying at least 30 to 50 bucks for that report, it's not real because they're expensive. Okay. So this is a system where we update you every 90 days for the rest of your life with the real lenders reports and scores, what the banks actually use, not what the Credit Karma and credit card companies use. Debt settlement and elimination is where, settling on bad debt for pennies on the dollar. Real estate mortgage lending solutions, financial planning, investment solutions, look at your Roth IRA, 401k, annuities, things of that nature. And then we also do educational workshops. So if you've got a team of, let's say, 10 or more, then just reach out to us and we'd be honored to do a workshop as an employee benefit for your team as a Zoom meeting. So we've done Lockheed Martin, Southwest Airlines, Genentech, Oracle, Sun Microsystems, Adobe. So this is a nice employee benefit package. It's basically a mirror of what you're going to see today for your team members. So that's it. We've got a pretty broad spectrum of things that we're involved in. So let me jump into this. I'm going to go rapid fire here. Any questions you might have or comments, just put them through the chat log and we'll do Q&A when Amanda and I are done. So there's two types of business owners. There's the A-paper clients to help maintain good credit status in finances. Those are the types of people that we coach. And then there's the B and C clients that want to achieve A-paper status to get faster approval times with lower rates. So an example, I'll give it to you. Amanda will probably have some examples on the business financing, but this is for like mortgage, for example, just to show you the impact. So this is a mortgage payment savings calculator. So if you type in, let's say it's a $500,000 home loan, and then you drop in the score, let's just say it's 620, do a 30-year fix, just to show you the impact of what I'm going to teach you in a moment. What this is saying is that if you've got a 620, a 639 score, it'd be around 7.3% at $3,400 a month, plus property tax insurance, compared to enhancing your scores up here, 768.50, it'd be 5.7. At $2,900 a month. So the difference between a score here and getting you up there would save you $523 a month, $6,200 a year. And by the time you're done, you're saving $188,000 in interest. That's another investment property out in the sticks somewhere. So most people are shocked when they actually see this. Since we only have a limited amount of time, my professional opinion is if you look at if you're saying, when's it time to buy a commercial real estate or residential, I would say late next year, third or fourth quarter, because if you look at the last 50 years of presidential election cycles, what happens to the interest rates? Do you guys know? They go down because the politicians want to look good. So if everything follows the suit on the normal pattern, which we're not living in normal days these days, but then my guess is we're going to go from 7% where we're at today down to probably about 4 to 4.25. And I also see values dropping by that time too. So you can pick it up for maybe 20% less. So that's a brief mortgage education. So after our coaching today, you're going to more than what 95% of the population knows about credit and how to effectively leverage your scores to build wealth for a lifetime. And what I mean by helping you build wealth is once you obtain and maintain a 740 to 770 lender score, not the fake Credit Karma scores, on average, the clients, you're saving typically $300 to $600 a month in interest. And that's if you're making income less than $100,000 a year. If it's greater than $100,000 a year, it's typically $600 to $1,000 or more in interest savings. So what could you do with that with your marketing and to grow some more wealth? That comes with faster approval times and less money down. I'll also, if we have time today, teach you 30 years of experience when and how to negotiate with lenders and insurance companies. These techniques are not taught in any school or university. Lenders and insurance companies do not automatically give you the best rate just because you have a high score. So by the completion of our coaching today, you'll receive a Harvard education on everything credit and lending. You're more than what most lenders and financial planners know. Okay. So I'm going to skip through this. I'll skip through that. Okay, so here's the fun part. So how to achieve and maintain a lender credit score above 770, right? It says CIQ has been helping people just like you for over 30 years nationwide. We're all-in-one financial solution experts. I already shared with you, we're 33 years old. So here's a credit score grade. This will give you a lay of the land where we're at, okay? So 850 is as high as you can go. But once you break the 770 mark, doesn't matter at that point. So if you're doing financing loans that are called jumbo or super jumbo, and that's 729,000 or above, then I really want to see you and your significant other above 770. Okay. If your loan amounts are below this dollar amount, then 740 plus is perfect. Okay. There's not a whole lot of difference between the 740 and 770 when it comes to that point. Now, if you're below 740 on your lender score, that's the danger mark. Okay. And you'll see why in a moment. So with 740, you get better rates with faster approval times. If you're buying investment properties, you have to be above 740 or you're toast. So instead of 20% down, they may want 30 or 40% down, maybe even 50% down, depending on the loan amount, right? And the rates are higher. If you want to demand a 0% interest rate on a new vehicle, you have to be above 740 to put you in that power position. This is a technique I taught Lane a couple of weeks ago that he took advantage of for a new car purchase. And then if you want to demand them to drop all your interest rates on your credit cards to 9.9 fixed, you have to be above 740. If you want to demand cheaper car, home, and business insurance like surety bonds, they also use the credit scores, you need to be 740 or higher. All right. At the end today, if we have time, I'll give you some scripts on how to negotiate those things. For business lending, which is Amanda's expertise, she'll cover a lot more in that. Generally, if you can be 720 or higher, it's more the A-paper stuff, and you got to be in business for 2 more years. She's got some really cool loan programs and go below that and get outside the box, which I'm sure you're going to be impressed with in a few minutes. But generally, that's a good rule of thumb. Been in business for 2 years, 720 or higher for A-plus paper. Refinancing your property and you're pulling cash out to invest back into your company or things of that nature, you need to be a minimum 680 or higher. And once again, the higher the score, the better the rate and term, but this is the minimum. If you refinance a home and you're not pulling cash out, you're just doing a rate and term to drop the rate and payment, which I predict next late third or fourth quarter next year, probably a good time to strike on that. You need to be at least 660 or higher minimum. And then doing purchases, FHA, conventional non-QM, which is like a bank statement loan where you can buy a house without showing your tax returns. You would just look at bank statements, minimum 640. And then VA, FHA, military loans, government loans go as low as 580. But I try to discourage people from doing that. If you're that low, you may be potential foreclosure. And then anything below 580 is private money, hard money. So hopefully this is helpful, you guys, seeing how the world's working right now for risk assessment. Sure. Okay, good. If you have any questions on that, once again, put it through the chat log. This is how banks, employers, and insurance companies assess risk. It says, as a group, consumers in the 700 to 749 range, right here, have a delinquency rate of 5%. This means that for every 100 people in this range, approximately 5 will default the loan, file for bankruptcy, or fall 90 days past due on at least one credit account in the next 2 years. So as I'll teach you a little technique. I copy what the top Fortune 500 companies do. And so you may or may not know this, but if you're looking for seasoned people who have less drama, this is the 80-20 rule. For example, what I did is I adopted this program when we hire people. And most of my team has been with me 20, 30 years, right? And so what I noticed when I switched over to this, when I hire people on my team, we won't hire them if they're less than 700. Okay. We just won't do it. And what I've noticed dramatically is this is pretty darn accurate. So let's say there's a job promotion coming up or a new hire, and let's say Susie's got a 700 and Johnny's got a 620. That means that there's a 31% chance that Johnny's going to be late for work, call in sick, or have lack of focus on the job because there's a life event going on. So the 80-20 rule really applies here. I've seen it from my own 2 eyes. Little tip.
Lynn, what do you think about that? No, that's interesting. That's an interesting insight right there.
Yeah, no, I think that it's definitely when I worked in the casino business at some point in my life. And one of the things that they definitely did was they checked our risk of where we were financially. We were managing a lot of money.
And we're all empathetic watching this cast today, but there's death, divorce, job loss, medical. Those are the big 4. And I get it, but I have seen this play out. My turnover rate, once I started doing this, it dropped like 95%. It's that dramatic. So anyway, I'll move on. So just take that for what it's worth. So here's a breakdown of the formula. So many of you may know some of this, but I'm going to go into more of a nuance, okay? Because what I've learned over years, if I just tell you what to do, but I don't tell you why, then you may not stick. You may not be as impactful. So payment history is 35%. So we all know a late payment can drop a score, but most people have no clue at what degree. So it says any new late payments, collections paid or unpaid. And I'm going to park on that note. Did you guys know that when you pay off a bad debt, as you heard my testimony earlier, they don't delete the paid collection typically, right? And typically when you pay off a bad debt, guess what happens to the credit score? It goes down. And the reason why it goes down is because FICO can't calculate how much money you've got in the bank, whether it's $1 million or $1. But what it does know by patterns, which is what it is, an algorithm, is that when people pay off bad debt, what you're typically doing is you're taking your savings or your reserves to pay it off, right? And if you're sick and you can't work a couple paychecks and you just hypothetically depleted your reserves, what's going to happen now? You're going to start being late on other accounts. So that's why it drops your score. It doesn't raise it when you pay off a bad debt, right? So we have a better solution if those things are on your report to resolve that, which we'll cover in a minute. So it says it will typically drop your score as much as 107 points. Even one new 30-day late payment of $5 can cost you the loan you want, the credit score you deserve. In fact, here's the key point. The lower the minimum payment is that's due, that you're late on, the further the score will drop, as it assumes if you can't make a smaller payment, you're in serious jeopardy, and then the score dramatically drops. So that's actually how it works. The smaller the payment is that you're late on, the further the score drops. I assume most of you are thinking right now, I thought the opposite. The larger the payment, the worse it is. No, it's the opposite. Okay, it makes sense once you think about it. Now, these next two slides are the most important two slides I want you to memorize and apply the rest of your life. These are very powerful. We call this the 30% rule. Now, this only applies to revolving debt like store cards and credit cards. So what you do is you look at each credit card limit and subtract 70% from the credit limit amount. This will equal 30% of available credit. If you have to use a card in a life or death emergency, just don't exceed that 30% mark. So if you have $1,000 limit, don't exceed $300. That's 30%. So a zero balance gains the most points. Every dollar that shows up in the balance column when on the lender's credit report, it takes away points. Once you break that 30% mark in that balance column, it dramatically starts dropping the score. Okay. So creditors report data to the bureaus every 30 to 90 days, which is the key point. Randomly throughout the month, whether it's the 1st, the 15th, or the 30th, when most people carry a balance. They do not report what you paid that month on the statement, but rather what your current balance was, a snapshot in time as they upload the data, thus driving down your score. So that's the dirty little secret. They're not reporting what you paid it down to on your statement. They're reporting what did it look like the day they upload. And we don't know what day they're going to upload, do we? So let me see if you guys are paying attention here. So the chat log, based upon what I just showed you, let's say you go in there and you pay off all your credit cards to zero today, right? Based upon that bit of information, if you did that, how long could it take before it eventually shows and uploads to all three bureaus? How long could it take? Go ahead and send it through the chat log, see if you got it. I'm giving you a little hint there. Okay. All right. So it could take as long as 90 days. All right. So second question. So let's say next month you go back to you paid off the cards today, and next month you go back to using them again. Right. So if you manage your credit cards that way, even though you pay your credit cards zero each month, but you're still using them every month, will it ever show zero on the lender's report? Yes or no? Put it through chat log. Yes or no?
Come on, folks.
The
you
answer,
got to participate here.
Yeah. Because this is a big one. So the answer is highly unlikely, no. Okay. Because we don't know when they're going to upload. So what I tell people is if your company or you're going through a cash crunch, just remember at a bare bones minimum, if you can't do what I just taught you, then 90 days prior to applying for anything, a home loan, car loan, business loan, whatever, 90 days ahead of the curve, pay off all the revolving debt to zero, lock the cards away in the safe so you're not tempted to use them, and then wait 90 days, and then you let them pull the report. That way you've maximized this part of formula. And it could be dramatic, like 30 to 100 points, right, Amanda?
Oh yeah. Yeah. The debt is a huge factor in everything that goes
The
in
revolving.
your report. Yeah.
Yep. So this is dramatic. Okay. So here's the second piece. Length of credit history is 15% of score. The longer your credit cards are active and open, the better your score will be. So through the chat log, take a guess. How many credit cards does each person need to have? Let's say you're married, right? I'm not talking about authorized users because those don't count. How many credit cards do you need in order to get up in the high 700s for at least 12 months or more? Take a guess. 1, 2, or 3 or more. 10. Okay. 10. Bingo. All right. The answer is 3. If you don't have at least, if you don't have at least 3 or more active, open, revolving trade lines under your own 2 feet, non-authorized user, even with cleaning credit, and it's very hard to get up in the high 700s, and they have to be at least a year or older. Okay. So if you don't have at least 3, you need to go get 1 or 2 more. Okay.
Don, really quick.
Yes.
Just address. So what if you have credit cards and you just don't use them? My wife was going to close one of the accounts that she never uses anymore.
Great. I'm glad you asked. We're right here. Are you trying to push me along? That was subtle. This will address what Lane just said. So once again, the older the credit cards you have, the better your score will be. So 10, 15, 20-year-olds cards, the older, the better, right? So this is how you manage the credit cards. Don't ever close them, because if you do, this will cause you to lose all the good history you built on those cards. Instead, keep the cards open and just make a $5 purchase, a cup of coffee, once every 5 months to keep them active. And why do I say 5 months? Because a zero balance credit card goes inactive after 6 months of non-usage, which will do what to your score? It'll drop it. Okay. So just remember, $5 every 5 months. That's the perfect world scenario. They'll really enhance your scores that way. So let's break down the definition of an inactive card, which is what Lane just said. Any open cards with a zero balance that has been used in 6 months is considered inactive and will drop the score. Charging a small amount on the card every 5 months is $5 or less, then paying it off when you would wait until you get the statement, not before, will help your score increase within 90 days, stimulating activity. And here's the key point, and to ensure the creditor doesn't close them from non-activity. And if they close it, Amanda, I know you've seen this, it could drop it 100 points, gone overnight. Yeah. I really want you to memorize this one. $5 every 5 months. Yes, sir.
To emphasize this, Don was in one of our sessions, maybe 3 months, 2 or 3 months ago. I was already at like a 740, 745, 746 credit score. But he was like, he did a soft pull again and looked at our credit report. We were going through it. He was like, hey, there's a credit card over here that you haven't ever used. This is really hurting you. Like, you could be like a 780, but you haven't used this credit. I'm like, what credit card? And he was like, what's this one? And I'm like, I don't even have that credit card in my possession. It had never been the mail. Credit card never got to me in the mail. I got busy with life and just forgot about it. 6 months go by. I'm not using the credit card because I've never received it. And that's one of the things that happens is if you're not monitoring your credit and looking at these things, you can easily drop 100 points or be up 100 points.
That's right. Thank you, Lane. It happens probably 30% of the time with our clients. They just forget. That's why our ongoing coaching helps. We're constantly checking in, looking over your shoulder. New credit's 10% of the score. New open accounts drop your score for a year. Now, why is that? When you open up a new trade line, FICO says, until you can prove you can handle this new debt, we're going to take points away from you for a year. And on the 13th month, as long as you weren't late on it, they give your points back and give you a little bit of a boost. I always train people, plan 1 year ahead of the curve of everything you do. You're doing a business loan, car loan, home loan, bigger ticket items. Really don't be opening up other accounts 1 year prior to that, is my opinion, right? New inquiries, when they pull the credit, can drop at an average of 2 to 3 points. Now, when we pull our lenders reports and give you copies of it, they're soft pulls. We pay a little extra money for them, so it's a soft pull. It won't create an inquiry. It won't drop your score. I know Amanda does the same thing, but once she'll explain this when she's speaking, they'll do a soft pull in the beginning, and then once they're ready to fund, they have to do a hard pull because that's the banking regulations, right? Is that right, Amanda? Okay.
Yeah,
good.
yeah. When we're pre-qualifying, it's just a soft pull.
Yes, good. Yep. So new inquiries, it says 2 or more inquiries within 90 days that are hard pulls can drop your score an average of 5 to 22 points. 1 inquiry within 90 days can drop it 2 to 3 points. So the good news is your points will be returned within 90 days of each inquiry. You get your points back after 90 days. The more inquiries you do over a 90-day period, the higher the score loss. So please consult with us before you start doing stuff like that, or Amanda. So types of credits, 10% of the score. There's a hierarchy as far as credit weighting. And mortgages have the greatest amount of weight with good, bad things happen to them. Then it's auto loans. And now this is a very interesting fun fact. So it says, do not pay off in less than 2 years. Otherwise, it'll drop your score up to 60 points. Gone. Okay. So make sure you carry that car note for more than 20 or 20, at least 24 months. Now, if you refinance it or trade it in and get another car loan in behind it within 90 days, it won't drop it because the reason why it drops your score, because it's assuming you're depleting your cash reserves, like when you pay off a bad debt. So as long as it sees another loan in there within 90 days, it won't do that. Okay. Revolving lines of credit, such as bank cards and store cards and other installment loans, such as student loans, have the least amount of weight when it relates to the balances of the debt load. Now, I bet many of you on this cast today may have kids or your own student loans, whether it's $500,000 or 100,000. So here's some good news for you. I bet you've been thinking, geez, if I could just pay off these student loans, my scores will go way up. And it's been haunting you. Here's the good news. It's not really going to matter that much. So don't worry about it. So we've got doctors that are clients that we're cleaning up the credits they could do a home loan that we're going to assist them with. And I've seen doctors pay off $500,000 in student loans in one day. And you would assume the score would skyrocket, right? It only raised it 3 points. That's it. So what I tell people to do, let's focus on the revolving debt and the other debt, and then get into a property, build up equity. And then when I see the interest rates drop, we refinance the mortgage loan, pull cash out, pay off a student loan debt. Now you're debt free. You're using the real estate to pay off the student loan debt. It's a national epidemic. Deduction. Correct. That's right. Exactly right. Thank you, Lane. I taught you well. So this is how we remove derogatory data. When you look at a credit report, all it is data, whether it's bankruptcies, late pays, collections, it's just data. Every creditor has approximately 38 pieces of data they're supposed to track. We know what data they do and do not store. So what my computer system does is it analyzes all the negative data within the file. And then, for example, let's say it's a Macy's late, right? It says, okay, with Macy's, over the last 24 months, out of all of our clients nationwide we've worked on, with Macy's, what question out of the 38 questions we're allowed to ask them legally can they typically not verify? So we're going to ask Macy's a different question than we would Bank of America Mortgage or the bankruptcy courts, because we can work on bankruptcies too. Now, the key is we can only ask them one question at a time. That's it. We can't do all 38 at once. Otherwise, it's frivolous and they'll kick us out of their system. So it's important we ask the right question in the right sequence. Then we take that single question and upload it electronically to the 3 bureaus. We stopped writing letters and disputing like 18 years ago. It's too slow. All these little TikTok people out there now, right? They all write letters, right? And the stuff comes back. So if they can't verify that specific data set or piece of information, then by law, they must remove it within 30 working days. So it's a public law 91-508. So it's forensics is what we're doing. And once again, there's no letter writing and no disputing. So this is way beyond normal credit repair, okay? And it's our legal right to have the information verified. So there's no magic wand that we're using. We've just been doing this for 33 years. We know questions to ask, which questions not to ask. Here's the average results. Within 45 days, we pull the first lender's report, email you a copy of it. If you're doing some financing with Amanda, we give her team a copy of it. And then now typically 40% or more will come off in that first process with a 30 to 50 point jump on the score. Now, whatever is left on that report that's negative in that 45-day process, we aggressively attack them again and ask a different set of questions every 90 days thereafter. So basically, it's a process of elimination. Eventually, we win. Within the first year, typically 80% or more comes off with a 100+ point increase, provided you're listening to your coach recommendations, no more lates or collections, and the program will work quite well. We have 2 guarantees in the program. There's 110% of your money back if no items are removed, but the more powerful of the 2 guarantees is the second one, which is a minimum point increase guarantee based on the initial score. So in other words, we place you in a program that guarantees a minimum of a 740 or higher on the lender score, or work on your file forever. So I haven't found anybody with these types of guarantees. The only caveat is as long as there's no more new boo-boos, no more new lates and collections, stuff like that. So I'm hitting my wall on the time here. So I'll wrap this up. And I highly encourage you to go through the coaching. I'll show you how to do that in a moment. Even if you've got if you're below 740 lender score, we definitely want to speak with you. But in the actual coaching session, it's about 2 to 3 hours. It's a lot. One of the biggest benefits is what I just did as a testimonial with Lane and his son. He just saved about 10 grand on a car by following my techniques.
No, it was more than that, Don. We saved over 15 grand.
15 grand. Thank you. We teach you about auto financing, who to talk to, the desk manager, the timelines. Is a whole script that I give you to do it. We talk about how to negotiate credit cards for the 9.9 fix, because you got to know when and how to do it. And we also talk about we give you a script on insurance, how to talk for your home, your business, auto insurance, stuff like that. So there's a whole lot more. So the world of real estate and business financing can't recover quickly without personal and good credit scores. Here's the Lane negotiated and Amanda negotiated this for you, just for you and your significant others and your employees. Normally the consulting fees are $300 to meet with us. But based upon our relationship with Lane, and he twisted my arm pretty hard, he's a good negotiator. He's negotiated where you're only going to pay $50. That's it.
And it is about a 3-hour consult. One of our agency's partners just went through it with Don like this last week, and he said it was over 3 hours with Don.
Yeah, as much time as you need, we'll give it to you. Let's put it that way. We go deep, and this includes your significant other too. So even if you're not married, but you have a significant other, maybe you have a partner in the business, it's $50 to cover both you guys combined, right? It's a soft pull report, and it won't drop your scores. We'll give you a copy of it, not the fake Credit Karma consumer scores. And you'll get a written action plan on how to quickly achieve your financing goals as well.
Awesome.
So it's very in depth, right? So if you want to take advantage of that, I'll leave this up on the screen for about 60 seconds. You want to text the word credit to 72,000. You're going to get a little link text back, click on that, and then select a 5-minute slot for Grace to contact you. It could be even 2 weeks from now, but link will expire shortly here today. So just make sure you do it now or pick a 5-minute slot. And the first person who does this and books it, even if it's a week out, doesn't matter. It's a 5-minute slot. You get the free credit coaching. You get it for free. All right. So it's a gift from us to you. So the first person who does it will get it for free. So that's all I've got.
Thanks, Phil.
All right. Okay.
Appreciate that.
Thank you.
Hey, put the number 1 in chat if you felt like that was some really good information. If you learned something new. I can tell you, I was in the mortgage banking world for over a decade. And I knew obviously being in that world, you have to help people with their credit. So I knew a fair amount about credit and credit repair and credit restoration and all that, but it wasn't my world, wasn't my expertise. And so having gone through the session or the coaching and all that with Don, I learned new things many times over the years that we've been together. So anyway, Don, thank you very much. I really appreciate your time. Amanda, you're up.
All right. I think the biggest takeaway is that the credit algorithms are not fair. And I think anybody can agree with that because it's horrendous how they are. So we look at it a little different at Fund and Grow. So first of all, Amanda Webster, I'm the vice president over here at Fund and Grow. We specialize specifically in business credit. So basically what that means is we actually are a white glove service that does all of the applying, negotiating, and all that's needed in order to get you the business credit. So I'm going to have Zach, who's my producer in the room, he's going to share his screen in order for you to see my PowerPoint. So he's going to throw it up there in a second.
Awesome.
There we go. All right. We call this the 5 steps to securing business credit. Why business credit is the best form of funding available. As a little bit was talked about earlier, is that interest rates are a little unstable right now for everything. They call us an alternate form of business funding because we're not a traditional business loan. Business loans, business lines of credit, we do have a loan department that we're building out, but that's not going to come with the 0% that we target here on the business credit side. And some of the things that you just talked about, Don, ways to boost the credit, we do that internally as well, just by getting the personal credit. Stop using that, right? Don't use that for your business because you're dragging it down. You're keeping that 30% much higher, which the utilization is huge for us as well. We need you to get 35% on that revolving debt. It has to be under 35% for you even to qualify for the lenders. So we actually end up boosting your credit just by getting all of the business credit off of your personal side. Stop using your personal savings. Stop using all your personal stuff in order to fund your business. The other thing is part of our membership is making sure you have a lendable business entity. So a lot of people think that you can just have any business, you're going to get your funding and it doesn't matter. When in reality, the lenders actually look at what type of business you have, what is your business model, what industry are you in, and making sure you're not like Amanda's risky investments. You don't want to have things like that because the lender's just going to deny you right away. So we do, as part of our consultation, we look at that and every piece that goes into it before we apply for you. So the entire thing is to get you up to $250,000 at 0% interest. Now, yes, the 0% will be for a set amount of time, but we will talk you through a lot of that and we'll talk about how we extend that. And then the top reasons you're getting denied. We have multiple reasons why you might be getting denied. All of them actually tie into what Don was talking about, to be honest. So let's get into it, Zach, if you can switch that screen for me.
Really quick, put a one in chat if you are currently using any type of personal credit card or your personal credit is on the line, but you're using it for your business or your agency. Put a one in chat if you're using personal credit for helping with your business funding right now. Okay, we see a bunch of ones there. So that was a really good point there that Amanda made. Don't use personal credit to help fund your business because it's hurting your personal credit score. Amanda, back to you.
It's hurting both sides, to be honest, because you're using your personal, hurting that, and you're not building anything on the business side, right?
Correct.
So you're never building up that business credit profile that is super important for your growth later on. So 82% of businesses fail due to the lack of funding, right? Because you only have so much on the personal side that you can get. So there's multiple different types of business credit, business funding you can get, business credit, corporate credit, and then you get into the business loans. So we focus on building you up to, and a lot of times over, 250,000 in funding through credit card stacking. These are business credit cards. They just have really high limits in order to stack you over. The 0% interest that we target is on average 12 to 22 months. It does not impact your personal credit reports because it doesn't report to your personal credit. So although your personal credit has to be in a set place for us to get you approved, it's only looked at by the lenders for approvals and then it's moved away. One thing you should never discount is the rewards, cashback, travel miles, all the things that go into those business credit cards. There are times when the cash back that we receive pays for certain things within our business because we actually use business credit here at Fund and Grow to pay for a lot of different things like our marketing, our paid ads, our Amazon purchases. So these can cover any business expense. As long as it's a valid business expense, it's going to be covered. It does not use collateral or assets, right? So it's not like Shark Tank where you're not securing it. Obviously, we don't want you to default on it, but it's not attached to an asset if you do. It's going to be there if you have to have that moment to fall back, if you have to close your business, at least you're not risking your own assets, which is what happens when you use your personal. You're not giving up equity in your company to do this. There are very few exceptions, but you do not need your tax returns or income verification. Now, some people end up hitting that only because there's some type of fraud alert or something out there that the lender has seen, or you've had something with that lender in the past. One huge thing, other than a business loan, right? A business loan, you get approved for $100,000 and they hand it to you. It's in your bank account. You have to start paying that back today, right? Business credit, you only pay it if you use it and as you use it. So it's revolving, similar to your personal, but on the business side. So you can get this credit and then plan to use it the best way for your business. There's no hidden fees, there's no origination fee. There's nothing like that you get. There's no points you're buying. It's not like that when you're talking business credit. You are going to only pay, we have a membership fee, it's an upfront fee, flat, and that's it. Don can actually even tell you from his own experience that most companies who do what we do are charging you 9-10% of all the funding they receive. We do not have a back end side like that. Oh
yeah.
So
you guys are very unique. That's why I love you.
I will tell you, and I told Don this last week, like we absolutely started that way. That was how Ari started this business, was on that percentage model because what everyone was doing. But he learned throughout the years that it was actually far better to do it this way because it gives the clients a better service experience. And honestly, it can be profitable either way. Obviously, charging 9-10%, that's a lot of money. That's a huge amount of money. Of course, it can be profitable for a business, but how many people can really afford that anyway? So it's kind of like a bait and switch, I feel like, for the.
Yep.
So the funding is limitless in the sense of how you can use it. These are examples of true ways that either we have used it or we know our clients use it. Attending JV and network events. I actually am sending my marketing director tomorrow to Houston to an event. That was used with business credit. Educational courses, use that across the board. You can consolidate your high interest debt if it's for business purposes and be able to have a much lower interest rate. Marketing, advertising, real estate fix and flips and rehabs, contractor costs, SEO optimization. It goes on and on. E-com, inventory. You can use this for almost anything. There's 2 caveats to that. You cannot use this for the cannabis industry and you cannot use it for crypto. Crypto is looked at very negatively in the lending world. So also, corporate credit is a form of business funding that people sometimes will confuse. Your non-recourse funding. These are going to be your vendor trade lines, Home Depot, Amazon, Uline. They do not require a personal guarantee. There is no credit check on these, and they deal with Duns and Bradstreet in establishing a paydex score. This is super, super important in your business journey. We offer this as a free add-on to our membership. So it's included in the membership. We show you how to not only apply, but to build your corporate credit, because you really need that in order to grow your business in the future. As an example, Fund and Grow, through building their business credit and corporate credit, purchase the building I'm standing in here in sunny Florida with non-recourse corporate credit as a mortgage. And you can't do that until you build this stuff up. So it's super important. And again, not using your personal lending abilities in order to buy your buildings. Now, that's some people, it's a pipe dream down the road, but it is a dream that you can have and it is attainable. So again, we use major lenders, Bank of America, Chase, Amex. We're not going to just random mom and pop or in-house funding. These are the major lenders that you're getting these cards with. Again, they don't report and you can use anywhere. Zach, there we go. It's a delay on my side. I apologize, guys. So Don actually went over this. It's pretty almost exactly how it comes. We say 35% for the debt to limit ratio because that's what our lenders need to see. 30% obviously is your golden spot for your highest possible score. So I think we went over credit positioning. These numbers are pretty much almost identical to Don on that side. So entity structure, again, it does impact your funding on the business side. Is it a safe industry to lend in? Does your business sound risky? Is it a seasoned business? How long has it been operating? All of that happens. But as a side note, I will tell you that the lending patterns we are seeing is that we're able to do startups. Almost no business lending is done with startups. So that's one of the huge benefits for us is you can create an LLC and we can apply for you next week. So it's not something that we need a huge amount of seasoning on the business side. Because it helps having that personal credit, it actually is what the bank looks at. So in the projected revenues and all of these different formulas they look at, we know exactly what they want. So you can utilize this for multiple entities. You just have to only do one at a time. So if you have 2 different businesses, because it's a membership, it's 12 months. So we have multiple rounds of funding. So you can apply with one business the first time and a different business the second time if you need to build both at the same time. And the funds can be lent between entities also. Again, it's always for business purpose. If it's for a business purpose, you can make it happen. Knowing where to apply. So basically, when you come in as a Fund and Grow member, you have a one-on-one consultation that reviews everything on your credit profile. And again, like Don has said, we're not talking Credit Karma. We actually do a soft pull with raw data from the bureaus, and then we have an algorithm that reads it. We know our algorithm is set to what the lenders are seeing. So we are able to see exactly where you're at, where you need to be, and what might need to do a little tweaks here and there. Sometimes it's a matter of paying off a little bit on your card and you have to wait for it to report to the credit, which, as Don explained, sometimes isn't the easiest way to get to. But we go through that whole consultation. And then once you're ready for funding, which hopefully is very quick, my account managers go in and actually see what lenders are best for your specific situation. If you have a relationship with a bank, they're usually your number one you want to go to. They already know who you are, your business bank account was with them, or you already have some type of personal relationship on that side. We leverage it for that. We also extend the 0% with the card stacking process. And we do apply for multiple batches, which again, builds you up to that $250,000 over that 12-month membership. If you do need personal credit building, so let's say your credit is not perfect, and you would benefit from a round of personal credit, we do offer that to our members. And then we extend your membership out an extra 6 months in order to build the seasoning, because your new personal credit cards for business credit Need to have 6 months of seasoning before we can use you to apply with. And again, the algorithms are all there. The average age of your accounts, our algorithm is looking at the average age over all of your revolving. And that's why, as Don explained, it's super important not to close accounts, not to let them go inactive, because you lose the average age then, and that affects our ability to apply for you. So you need the right strategy. Your personal credit, we want to make sure any necessary updates are there. Sometimes just as simple as your middle name is wrong on your credit report can cause flags for us on the lending side. Business entity, new or existing, doesn't matter. We just need to make sure it's set up correctly. Selecting the lenders, submitting the applications, then we in-house do all of the negotiations and get final approvals. And what I mean by negotiations is sometimes you'll apply for a card and you get denied and people think that's it. I got denied, I'm done, you walk away. That's not true for business credit, especially. Our team is very skilled in being able to call those underwriters directly and talk to a human. Because remember, when you're applying for a credit card online, it's just a computer, it's just an algorithm, and it's viewing your data and telling you, it's spitting out an answer. So sometimes you need a human on the other line to be able to explain something, get something pushed through. So can you do this yourself? Yes, you sure can. Go ahead. I'm just kidding. Don't do it yourself. If you're planning on doing it, don't do it yourself because you're going to mess us up. No, you can do it yourself. Like anything else, you can represent yourself in court. You can go build that house yourself too, but I'm not sure it's going to be what you want. You don't have to. You're saving
Amanda,
the time.
can I jump in for a second
go ahead.
to help you out there? My 3 decades experience in this is that I cringe when people have been doing stuff by themselves, or they've hired an entity who just promised the moon stars. And then it's like you have to go in there and undo the mess they created. So that's a big deal, because if they've applied it, these companies before, and then they go, I was going to have Amanda do it, I don't do it on my own. Then they'll come back to you and say, hey, they already applied, and they said, what do you mean X? They said Y. That could screw it up. I see that a lot.
Yeah, we got to be able to be talking the same language and given the same answers for sure. I think that like anything else, if you're an entrepreneur, do you really have the time to spend hours applying and negotiating for your funding? Normally, the answer is no. We save you that time and energy so that you can work on your business or work on whatever it is that is important to you. We're an expert, right? So like Don's an expert in his area, Fund and Grow, we're the expert on getting you business credit. So let us do it for you. Let us give you our years of experience in order for you to take that advantage and get more and more funding. We have a dedicated team that's here from the time that you sign up, for the processing team to the client relations to you have an assigned rep who gets you through the entire journey. We have a whole team here that handles everything for you. Funding in as little as 30 days. If you're ready to go and you sign up today, it could be as little as 2 weeks. The funding will be in your credit card in your hand in as little as 30 days. So it's definitely no different than a lot of lending. We try to do as quick as we can. So basically, what do our clients receive? A customized funding plan, one-on-one consultations, action steps to optimize credit profile if needed. If you utilize Don's services, you can probably come over here and not need any of that because you're already ready to go. But you go through all of this process and it's completely customized to you. Your path to funding might be different than your neighbor. Doesn't matter. No matter what, there is a path to it. There's a way to get there. Just sometimes one person has an extra step than another. So we have a custom CRM we've built from scratch to make this journey as easy as possible. We are as transparent as we can be. We make sure that we share information with you. We have all the inside knowledge dealing with these lenders from the years that we've been in the industry. And then again, the corporate funding guide to make sure you're also establishing and building your done side on the corporate credit and getting that paydex score going on. And it's a rinse and repeat process in the sense of once you get through the first round of funding, you go through inquiry removal, and then you get back into funding because we want to get you back in. There is a rest period because you have to season your business credit like anything else to show these lenders that you are a very low risk and you need the funding to keep growing your business.
So Amanda, can you just explain the card stacking and getting up to 250? Because like for us, in our first round, we didn't get 250, but that's in the strategy and in the future game plan.
Yeah. So when we do the consultation, we give you a good estimate of what to expect. Hopefully we exceed that expectation. But so in your first round, we say on average is 30 to 60,000 is what you'll see. We have some people who receive 100,000 in their first round. By round, what I mean and this is the stacking part, is we will apply for 3 to 4 different card offers specifically designed for what your profile has. And then, maybe your total after we do all the negotiating and all that is that 60 or 70,000. We then rest. We give you the coaching on how to utilize those cards during that rest period so that when you come back, you are in the best position possible to reapply, usually to the same banks. So Amex, for example, you might only get 10,000 the first time, but then that second round, we might be able to get you 60,000 from Amex. And then we're going to merge those cards into one, and now you have a $70,000 card. So basically, it literally is exactly what it sounds like. We are stacking the cards to build you up to 250. In the end, yes, you'll have multiple cards typically to get the 250, but they can all be utilized in the same way. There's also ways with third-party services. If you need to pay someone who does not have a merchant account, let's say you are doing a fix and flip and your drywall guy does not have a merchant account, you need to pay him. As long as it's a business expense, there are third-party services that you can do an ACH payment to him from your card, and it does not hit as a cash advance, because we very much discourage any cash advances on these business cards unless it's an absolute last-ditch effort, because there is a lot of fees that go in with those cash advances. But it is exactly like it sounds. It is stacking in the sense of we are adding multiple cards to get you there. But when we do each batch, if we do have 2 cards for one lender, we will merge them to the new card. And what's nice about that is not only does it get all the limit onto one card, it also extends that 0% from that new batch that you just did.
Mm-hmm.
So it is a nice little system that we get going through. And again, you don't have to do anything in that sense. You got to fill out your portal. You got to give us the information. You got to have a phone call just to go over the offers we're going to apply for. But outside of that, we do all the work on this side.
Amanda, can you go ahead if you want? I'll transition into Q&A here with this after you're done here.
Okay. So I always say the proof is in the pudding, right? So if you need to check us out online, I encourage it. You can go to almost any of these. You can go to any of these sites is the main ones that people look at for reviews, whether you're going to Google, Sotellus, Trustpilot, Facebook, the BBB, you will see all of the reviews of our clients, success stories. Yeah, you occasionally might see one that's not a 5-star, and that's okay. Everyone's journey is a little bit different, but what I can promise you is that we strive to make sure that everybody has that 5-star experience. So check us out online. You can see all that. So what do you want to do here, right? So what am I doing for you today? Because Lane had me come on today, I am offering everybody today, if they would like to sign up with Fund and Grow, we are going to give you a $500 discount. And what is this all going to include? Kind of recap on that is the Done For You membership of up to $250,000 of business credit, as well as up to $100,000 of the corporate credit. The credit coaching package will be utilized in there. The ability to pull the cash if you need to. The lendable entity creation if it's not already created. As another bonus, we will do a free partner upgrade. So if you want your spouse, your significant other, your business partner, your uncle, your mom, whoever, as long as it's somebody you have a relationship with, we will add them as a BOGO offer and give you 2 memberships for the price of 1. And we have a credit coaching package that's called premium coaching that we add in. You get 30 days free. And then after that, it's $50 a month. That is going to give you a lot of information. The whole archive is in there. We do live coaching calls on the 3rd Friday of every month. We just did it this past Friday. It's usually myself, my producer, and sometimes I bring a guest in. And it's interactive call like this, and we'll answer questions on anything business related. Even if we don't know the answers, we're going to find it for you. If you want to sign up today, your exclusive $500 discount is there. The membership price is $34.97, but we do offer payment plans. So you can get started today as little as $13.32, and you can even push it out and use the credit we obtain for you to pay the remainder. Little tidbit, our service is tax deductible.
Which is what we did too.
Yeah. And it's tax deductible on your taxes. You can deduct our service as a valid business expense. So the link is there if you want to take a look at it. If you need to give our office a call, my team is here. We do offer, if you'd like to pre-qual before you sign up, we'll hold the $500 discount, not an issue. And we're here to help. So any questions you have, I'll help you now.
Awesome. So real quick, can you address the business credit score, the paydex score, and how the transition goes from needing to use your personal credit to get that initial round of funding, and then how you help the business with their paydex score and building their own actual business credit?
Yeah. So honestly, you can get rid of the using your personal moving forward as soon as you sign up. But we'll transition that as part of the coaching that we do within here. But basically, at the same time and tandem, we want you to be, if you don't already have a DUNS account set up and have a paydex score running, we will, in our portal, we show you exactly how to do that. And you want to start opening those trade lines. We actually give you the roadmap of exactly what that looks like and how to keep doing that and building that. And we offer that portal to be available even after your membership if you are a premium coaching member to keep that going. So you want to build them in tandem. They are a little bit different, but as you build them both and as you get your business credit to keep going, and then you get your corporate credit to build, it's the same way you would build anything. You start applying for certain trade lines. You need to use those trade lines. If you get a Uline trade line and it's only $100, don't be discouraged. Use it and then be getting increases, keep getting increases. But all of this information is free with the membership in the portal on how you can keep growing that. And eventually, as you grow things, as you keep building up, then you'll be able to use your EIN with your paydex score to apply for bigger loan options, a corporate mortgage that's non-recourse on that side.
Jono, does that help answer your question? You had mentioned that you were always able to do things with personal, but were never able to get business credit.
Was business, you mean business credit or you mean corporate credit? They are two little bit different.
Why don't you quick explain, Amanda?
So corporate credit's going to be just the trade lines. It's just with your EIN. There's no looking at it. It's just your trade lines. Here you go. Zach's throwing it back up for me. So those are not your Amex, your Bank of America. These are trade lines and they're established through that paydex side. So it's going to start out small. Don't be discouraged by that. You might only get a couple $100 initially, but you just need to use it and keep increasing it and keep going in. And there's a whole plethora of trade lines there. You might even be using trade lines, net 30 accounts, net 60 accounts, net 90 accounts that actually report. Amazon has one. That's one that a lot of people use for that side. Our Amazon is connected through that. And then your business credit is going to be these credit cards that are through your major lenders and things like that. They do use your personal credit to get you approved, but then they use your EIN for reporting purposes. So there are actual business credit reporting agencies. It's a whole different class. We could go over that, but there is a way, and that's how you build that. And as you build both sides, that's where when you get to a certain level, when you get to having hundreds of thousands of dollars in these credit cards, as well as really large amounts on these trade lines, and your paydex score gets to a certain point, then you can look at the commercial lending non-recourse side as well.
And what are some uses of the non-recourse funding? I know you mentioned it, but just to reiterate.
It's a whole plethora. So it's things like your store accounts, like a Home Depot. If you're a contractor, you can get Home Depot, Lowe's, things like that. And they're vendor trade lines, but you can only use them there, right? You can only use them at that specific vendor. It's not like an Amex where you can swipe it wherever you want. It's only those ones. Whereas business funding, you can use anywhere. It's a major MasterCard, Visa, Amex type. Discover, all of them have business credit cards.
And so everyone also, I hope you as agency owners see how you can use this with your clients too, or prospects. And Fund and Grow does have a referral program. That's the referral had asked Amanda to give some sort of a special deal for MCOE agency members. But you can certainly turn around, become a part of their referral program as an agency owner, and then pass this on and use this as a resource with your agency clients to help them with funding for whether it's marketing programs or the like. So hopefully you can make that connection there as well. Are there any other questions that we have here? Lynn, do you see any other questions here? Don asked, what's the minimum lender score required for the best rates in terms?
Yeah. So the FICO score, again, has to be the FICO score. The FICO score, we need a 700. We recommend for the best results a 720 plus, but a 700 will be able to get you results. It's just that you're going to get better once you hit that 720. And Don knows there's like certain levels. Once you hit them, you're good. So it's different levels unlock things, and 720 seems to be the magic one to get the best business credit results.
For sure. Yeah. Now, everyone, I'll just, as a personal.
Robert had a question. He says, if I get taken off as an authorized user, will that affect my score? It depends. So if you've got at least 3 good active credit cards under just your name, you've had them for at least 12 to 24 months. And let's say the authorized user, let's say it was Aunt Betsy or something, put your JCPenney's card and they're maxed out on it, or they're over the 30%, that in theory should help your score by having you removed off it, right? And it takes about up to 30 days, just making a phone call, hey, remove me off of it. And they come off your bureaus. The danger though, is that like, if you don't have enough credit, let's say you're at 770 and you've only got 1 credit card and you're missing 2 and you take it off your authorized user, then it's going to have a negative impact, right? If the balances are low. So it's yes and no. Hopefully that answered it for you, Robert. Also on authorized user cards, they don't count as one of the 3. Just want to make sure you guys understand that. And not every credit card company will report authorized user, but the older they are, the more points you get. It's not the dollar amount, that helps your score more if the older it is. It could be a $100 credit limit. It's 20 years old. Boom, that's like gold, right? If you have any derogatory credit on your credit report, when you do an authorized user card, you'll see the trade line show on your report, but it will not as of July of 2011. They changed the algorithm to where if you have any blemishes, like a 30-day late from 6 years ago, it knows you're trying to game the system by adding an authorized user, and you'll see the trade line, but it will not help your score. So you're trying to play the authorized user game, you have to have flawless credit in order to help your score. So
great.
And
awesome
Don, I saw a question about the bureaus and as far as which bureaus for funding.
yes.
We look at all 3 on the soft pull side because we do know sometimes, but we typically don't ever know which lender is going to pull which report. Most lenders only pull 1 report, but they change it up. So Amex might pull Experian today, but Equifax tomorrow. So I never really know which one. So we make sure that all 3 are in line before we put you on funding.
Okay, you just taught me something new. Thank you.
For everyone, Matt and I used Fund and Grow. We're customers of Fund and Grow with Signal Genesis. And we got a little over $70,000 in our first funding round or phase. And for full disclosure, I would never have had the time nor the knowledge of just the time to go in and try and find the different credit card offers and then submit the information and then work with the underwriting. We had Bank of America decline us, which was unique because we actually had bank with them, but there were some reasons why they didn't seem to like the application. So what Fund and Grow did is they actually said, hey, let's see if we can get Chase to double down. And they actually were able to get Chase to double down for us to do double the amount instead of what they had originally approved. So we ended up with over $70,000 worth of 0% credit card funding, unsecured, for Signal Genesis in this first round. And we used one of the first lines of credit or credit cards to pay off the balance of the fee that we paid Fund and Grow to help us with the entire process. And honestly, it was well worth it, just from a personal testimonial standpoint, which is why I asked them to come on and teach everyone else about the resource, because they're very rare. As Don shared, there's a lot of sharks in this pool, and so it's very hard to get really good service, and it's honest, it has integrity, has a real bona fide program and service to give. So that's why I wanted to bring Amanda and Fund and Grow on along with Don. Any other questions before we call it a day here?
There are a couple. I think one that I think for me was really helpful. It was a kind of a high fact finder kind of person. What is just briefly, and I hope it helps everyone here, the sign up process. So if I've signed up and I've paid and I've scheduled, what are the next steps and what does that sort of look like from my perspective, meeting with each of you? Give me like a 1 minute or 2 minute walkthrough of what happens next.
Don, why don't you go first, and Amanda, you go second.
Oh, I'm sorry. I was answering Robert. Could you repeat that, Lynn? Sorry.
I'm sorry. It was just I just wanted to know.
Moment. Go ahead.
Essentially, I was just asking, we fill out the form, we sign up with you guys. What's the next step? What happens next? Just a helpful thing for the group and for myself.
Sure. I just put through the chat log a Calendly link. So you can either text it, which is easy, like I showed you, 72,000. But I just put a Calendly link that goes right to it. With this Calendly link, though, you got to say, hey, I was in the workshop with Lane. Okay. Because otherwise you'll get charged $300. So yours $50. That covers our cost for the lender support. So you're basically getting it for free.
Got it.
And then it's just a 5-minute appointment with Grace. So pick any time, and then she'll look at your calendar, your significant other's calendar, and then our calendar, and then pick a time that works for you. All right.
Very good.
That's it. Real simple.
Okay. Very good. Thank you.
You're welcome.
Amanda, what's your process look like after sign up?
Yeah. So on my side, if you sign up online, it's going to end up in the processing department next day, and they'll do a file review and see exactly where you're at and see if you need a one-on-one consultation or if you're literally ready to go to funding. If you need a consultation to go over certain aspects, then they'll send you an email to book that call. If you are ready for applications, they'll send it over to the applications department to get you scheduled and get you your appointment for your applications. If you want to call in and do a pre-qual first, that's no charge. You can do that as well. I'll have Zach actually put in the chat our phone number. You can feel free to give us a call. Just let them know that Lane sent you over to get the discount, and they will do a one-on-one consult right there on the phone and pull your credit. Again, soft pull doesn't hurt you, to see if you're ready to go. And then they'll set up your path, right? They'll let you know, okay, processing is going to set you an appointment for your processing call, or I'm going to go ahead and push you into applications. Either way, the process is to get you into applications as quickly as possible, just depending on your credit.
Perfect. Thank you.
And as a side note too, Lynn, if there's anybody who goes through our coaching before they meet with Amanda or vice versa, if you want us to sync it up to where every time there's an updated report, then we can our system will automatically upload it to you and to Amanda's team. So that way they can see, oh, hey, you're ready for the next tier of funding and stuff like that. So we work seamlessly together on that.
Great.
Yeah. I did see one question from Dylan. Does your business have to show a profit to secure any credit? So we don't require verifications, but we do ask for projections. So there's a formula that is used in order to do that, and your account manager goes over that with you and gets the projections from that side. So for brand new businesses, because we can work with startups, it's all on projections because you won't have that information yet. However, it's about what is your business model? How are you going to get that revenue? And we help you figure out those projections.
That's one of the real benefits to me of using Fund and Grow, is that they're coaching you through how to structure the application. A lot of it's just how you answer questions, and obviously everything's honest, but how you answer those questions honestly make a huge difference. And then just helping navigate that whole field of where to find the best options and all that. Awesome. Any other questions before we wrap it today?
I saw one that said, how many net 30 trade lines should you apply for and how often? I don't think the set number of how many you should apply for, but we do offer that coaching within the portal as well, and which ones we recommend you start with. And then honestly, whatever you need for your business is what you have to apply for to make it work.
One of the things that Fund and Grow did for me is they actually got me a $10,000 personal credit line just to help with increasing my score even more for the next round. So even though I didn't need that extra access to credit, having that extra $10,000 balance of access to credit is going to help my scores for the next round. So those are the strategies that you can employ, whether you do it yourself or you use someone like Fund and Grow to help you with it. Those are really good strategies. Don and Amanda both just shared a lot of strategies. Certainly you can do this yourself. You can take the knowledge and apply it yourself. Certainly appreciate all the insights and tips you both shared today about how to apply this for the personal side and the business side. Thank you both for your time. And we'll have the replay up on this as soon as we can. I know there will be a lot of people who will watch the replay as well.
Hey, Amanda, I got
final
one quick
closing
question.
thoughts?
Yeah, I got a question. Is that Flo's new price gun for the insurance thing behind you?
Oh my God. Zach's going to kill you for doing
the
this.
price adjustment?
Hold on. Do you want to see what this does? Here you go.
Like Goldfinger. Whoa, hands up. That's so cool.
That's great.
Oh, that's awesome. I gotta have one.
So it just shoots out money. It's all over my camera screen. I got a jam now, and Zach's going to kill me because now we have to clean it up.
That's a great way to end. I appreciate you both very much, your time. Hopefully all of you who attended have gotten some great value today, some good tips on how to improve your personal credit, how to manage it, improve it. And then obviously with the business credit, business funding, we could do a whole nother class on each one of these. So I know we try to pack it all in, but thank you both very much for your time. And hopefully there will be some people who find some value in signing up with you guys as well. Lynn, anything else?
My pleasure.
I'm all good. Signed up with both. Can't wait to hook up with both of you.
Awesome.
Great.
Thanks,
Thank you, guys. Appreciate
Thank you, everyone.
You.
Have a great day. Appreciate your time and attention today. Thank you.
All right. Bye-bye.
Bye.